Yo, what is good, family? Hope you all are having an amazing day. In today's breakdown, we're gonna explain the setup we had this morning on the Eurusd. We had another loss today on Bitcoin, and yeah, basically that's the advantage of having multiple pairs, that one pairs sometimes heads the others. Today we had Euro giving a win, Bitcoin giving a loss, and basically, other days is the opposite way. Some days both give the win, some days both give the loss. The important part is that it doesn't matter how many trades you have every day or how many pairs you trade every day, you always split the risk between all the potential trades that you take. Let's say you have 1% max daily loss, and suddenly instead of one trade you go to execute two or three trades. Obviously you cannot do 1% in each trade, because suddenly you are tripling the max daily loss overnight. So if you used to have like 1% max daily loss with one trade, and now you do four trades, obviously you're going to have like 0.25% risk per trade. Obviously with time you will size up, you will scale the risk. Obviously the objective is not you being at 0.25% risk per trade for all the rest of your trading career, but the objective is to always scale the risk up. Now, with this being said, we had Eurusd today. Basically, the trade was very simple. We will break it down slowly right now. But 8 a.m. opening of Frankfurt session, we came from this bullish structure, as you guys can see right here. That's fantastic. Now we had high, higher low, higher high. We can see that this high is 56. This high is 56. So those highs are equal, right? So we have high, low, lower high, and now the market went all the way to the downside to create this lower low, then lower high, and then lower low. So these three impulses are taking in consideration the internal structure. 1, 2, 3. This is very important because this candle breaks previous candle's high and then goes to the low. You will not be taking this in the live market if this was after the open, because the same candle that makes the lower high creates the third impulse, but this happens 5 minutes before the open, so it's all good. Now, taking in consideration the generic structure, we have two impulses, right? We have 1 and we have 2. We will have to have some candle that confirms the second pullback for us to take the bearish rule of the third impulse, because you can see that this candle closes below previous candle's lower low, so we need a candle that confirms the pullback, right? And also the only option that we have at the open per se is the bullish break off structure. Is the only thing we have right now at the open of Frankfurt. Now next candle, boom, bullish. So this is now giving us a lot of information. First of all, we already have a lower low. This candle is bullish on a bearish structure. This means that we already have a pullback. Therefore, on the generic structure, we have first impulse, we have second impulse. So now we don't only have the bullish BOS, but also the bearish rule of the third impulse valid. So now we have these two ideas, these two pending orders. Let's keep it going and see how the market builds up the structure. Nice. So we have now this bearish candle. What we see here is that price is really going up, going down. So we have, it's the same thing as we saw this in the 1 minute. All right, it's this bullish movement and then pullback. It's literally this. Now next candle, let's see what happens. Nice. So this candle is pretty much doing this. It's not creating a higher high. It's about to create it, but it's just an impulse. Next candle, boom, bearish candle. Bearish candle first, as you guys know, makes the high and then makes the low. So price, what it is doing right here is going up, going lower, and then rejects. So it's basically the same thing as this. This is what we have actually, right? We have first impulse, first pullback, second impulse, second pullback. And this rejection is basically a representation of this, of a bullish movement of the market about to make the third higher high on this internal structure. So everything you do right now is basically moving your bullish idea to this higher high, because now actually you have the bullish rule of the third impulse, and also you can move the bearish idea to this level, to this higher low, this one right here, because you also have a higher low, which creates a higher high, potentially a bearish BOS. So you have these two ideas, right? In the structure in the right, you have this bullish rule of the third impulse, bearish break of a structure. Fantastic. Now we just wait, all right? We have the bullish, the buy stop and the sell stop. Whatever goes active first, we go for it. Now, next candle activates the buy stop. Fantastic. So now we only have this option. We remove automatically the bearish idea, the sell stop, and we stick to the buy stop, to the bullish idea. Therefore, we just see what happens. And obviously, as I said in the beginning, and you saw, it hit exit. So that's literally another way to have the ideas in the session, because pretty much all the trades that we have seen in this channel is most of them giving the setup at the open of the session. But you guys have to understand, sometimes you will not have the setup being given at the open of the session. You will have to wait a little bit more in order for the market to set up, because perhaps the range is too wide, or the structure is too big, and the point of the BOS or the rule of the third impulse is far away, and you have to wait. You just have to wait for the price to do something. Charlie, but can I stick to the bigger structure and forget about this small one? Yeah, if you want, you can do so. What I will recommend is that you backtest at least 100 times that model, because that's not what I do personally. I always wait for the bigger structure, but if on the way of the market tapping my higher structure idea, price gives me a smaller structure, I will adapt to it and basically take it. All right, I'm not getting married to the bigger structure, but if for some kind of reason you don't really like this type of smaller structures and how the buildup happens, and you really want to stick to the big and clean M5 structure, just to tell you, you can do it. But before applying it on the live market conditions, I will recommend to backtest everything at least 100 times, so you can make sure that that works on your pair, on your session, with your way to see the structure. But the way that works is this one, adapting yourself to the smaller structure if the first one is too big and market doesn't give you the first idea at the open of the session. With this being said, family, remember that on the description of the video you have my Instagram. You can ask to me about the private group of students where we talk about these type of setups and give this type of ideas every day in the live market conditions. You will have access also to the intensive course explaining this strategy from zero, from scratch, and also you will have access to the app where we send all the market ideas from crypto, forex, and other markets. With this being said, family, see you in the next videos. Let's get it.